What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the SPY, the Nasdaq, the QQQs, and the indices, break down what the charts are telling us and what you should be watching for the future, what I do predict to happen given what the trends are telling us. Now, before I break anything down about this though, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 7 free stocks, and 5 out of those 7 free stocks could be a free Tesla share. It's a limited time offer. The offer ends in just 5 days. Check it out before they run out. With that out of the way, let's get on with the video. When it comes to the market, guys, the market's actually sandwiched between two major levels of a support and resistance level. You can see right here, the 50 moving average on the daily is what is actually stopping SPY right now around this 399 level, and supports around this 200 moving average around this 389 level. We're bouncing back and forth over and over again between these levels, and eventually this thing is going to break, and we're going to see a big move in one direction. Now, the bullish case, which is very unlikely, in my opinion, would be somehow the market ends up, forming this head and shoulders like formation. It looks something like this. We have a left shoulder here. We have the head right here. And a right shoulder could be forming if we do break the 50 moving average around 399. If we break that, we could form the right shoulder and get to about 410. But if we're bearish, if the market fails and we break below the 200 moving average, we're most likely going to see SPY retest 385 and then 380 very, very soon. If that happens, you have to watch 377 to 380, because if it breaks 377, the algos are going to start selling very hard, and we're going to see the markets tank. Now, we're basically stuck for now, so either one are possible, but given the news cycle, given the fact that right now there's a lot of fear involving Russia right now, the way they're actually hoarding a lot more of those nuclear weapons in another country, and also because of what's going on involving the Fed and Janet Yellen, what she said about the banks, we could see more bank failures as soon as this week. We saw Deutsche Bank, fail very, very recently too. The odds are favoring, in my opinion, based off the news, that the market's not going to get a huge breakout. We could try to push up a little bit more based off this daily candle, but I do believe we're most likely going to see the market end up coming down and retesting this 200 moving average and maybe even failing around there. But I want everyone to be prepared for this just in case. Be prepared for anything, especially because the market has been making these lower highs every single day as well. But once again, the odds do favor downside. Now, even though the market might retest like the 389 zone, maybe drop a little bit more, I want to note that the options chain is not that crazy for SPY on Monday through Thursday, but it becomes crazier on Friday. On Friday, we have about 1.5 million, it's actually 1.6 million, of these puts expiring, with 395 being max pain and a 2.67 puts to call ratio. The odds do favor the market makers might try to prop the market up near the end of this week. And if that's the case, we might see the market slow down early this week. As far as the data goes, I'm going to start from the top. We actually have not too much coming out tomorrow, just some manufacturing data with one Fed speaker. For Tuesday, we actually have some retail data and some housing data coming out. For Wednesday, we have some mortgage data coming out that's going to be somewhat important, but not like insanely important. Then for Thursday, we have initial jobless claims and the GDP data with some Fed speakers, followed by Friday when we have the big day, which is when PCE inflationary data comes out. So the market has a lot of big data at the end of the week. I do believe that until then, the market's going to continue to remain in this range, and where we break out will dictate how the market moves. However, given the signals I'm seeing in tech and the signs of many tech stocks starting to top, the odds favor the market maybe trying to get a small push up tomorrow with another failure. Then the market ends up tanking and actually continuing to drop as time goes on to reach us 389 and maybe even breaking below it. I think the odds heavily favor that. Now, what do I think is going to happen tomorrow? I'm seeing a push up maybe tomorrow, followed by another failure, and we're most likely going to see this thing slowly downtrend as the days go on. We're going to see SPY downtrend and retest 389 and maybe break below it. I think the odds are favoring that. As of right now, we also have a potential bear flag developing. I know my lines are kind of crooked. I do apologize, but it doesn't really matter. You guys could quite clearly see what I'm trying to say. We had this big sell-off. We're now range trading like this. This is once again a bear flag. If we break out of it from the downside area, we're most likely going to see even more downside from there. So it's very important to be prepared for this. The VIX is telling us, based off this VIX, it's very indecisive. It's stuck between the 50 moving average and the 200 moving average, going back and forth and back and forth. Given this trend, it looks to me like it's going to come down and retest 20 and maybe try to bounce off of that. But if it breaks 24, which is where the 200 moving average is on the daily, it's likely going to take off, and that's going to be very bearish for the markets. My prediction is VIX comes down because the market pushes up a little bit more. Then the VIX bounces off 20 again. You get a better bounce because of like more bad news. Because once again, the news is favoring more downside. The banks are falling. The recessionary fears are becoming stronger. The recession is most likely like starting now, to be honest with you. And once again, the Fed has been more hawkish. Janet Yellen did say the Fed may even have to step in to bail out banks even more. Most of the news is bearish. So I do believe the odds favor the VIX may be coming down a little more than getting a nice push up. It's going to be dictated by the markets. Amazon, same thing. I think Amazon, based off this daily candle, might try to push it up, retest 100, and fail and start coming down again. And eventually, it looks to me like Amazon's been in a topping process. The MACD is actually losing some momentum. A small push up followed by a rejection and a bit of a drop later on to fill this gap down at 92 seems very, very likely over the next couple of days. For Tesla, this is looking pretty weak in my opinion. Tried to balance. It could try to get to about the 193 area, and then it's likely going to fail and start coming down to fill this gap very soon. I think the odds heavily favor that. If it breaks below 188, that's most likely going to happen, and it's going to come all the way down to about 180 flat, right? I see that happening to Tesla very soon, most likely, maybe over the next couple of days. So please be ready for that just in case. NVIDIA could try to get one more bounce based off this overall structure, but if you look in the hourly time frame, it was actually forming, once again, another bear flag-like setup right here where it came down hard, is trying to bounce. Could try to push up a little bit more, try to get to the very low 170s, and it might fail around there, establish a lower high, and then it's going to fail and eventually come down to like 264, 260, and even lower than that later on. It looks like this thing was in a topping process around this 275 area based off the price action, the flip of the MACD and the PPO right here, and also based off how the moving averages are starting to contract a bit, right? They're starting to get flip directions. This is oftentimes suggesting we could see a trend change for NVIDIA. The odds are favoring that in my opinion. For Apple, we got some good news over the last couple of days involving the employee checks. Also affecting their product being released in the Lucids, and also their investments into the theaters. In my opinion, Apple could go one more time to 162, might try to fight for it, but if it fails, it's likely going to fail, and we're likely in a topping process still, in my opinion. If it fails at 162, it's going to likely come down to 157.5. If that fails, 155 or lower could come. I do believe that's most likely going to happen over the next couple of days. The IWM is looking kind of weak. Once again, trying to bounce. It tried to bounce off 167. If it does end up retesting the 50 moving average around this 173, that's likely going to establish a lower high in my opinion, and it's likely going to continue to downtrend. It's been downtrending for quite a while as the small caps and mid caps are still continuing to show some signs of downside. The Nasdaq has some major resistance around this 310 to 313 area. If it fails, it might retest this zone, but it's likely going to fail and start to come down again. It failed very, very harshly to break this. The odds do favor that happening because NVIDIA, Tesla, and many other stocks are continuing to show some bearish signs. So it might push up a little bit more and then fail and then continue to drop over the next couple of days. And I do see this thing potentially coming down to 300 flats or even lower over time. What else is bearish for the markets is the dollar is starting to break out. The dollar got a bounce off 102. It might try to continue going. It might try to get a retest of the 50 moving average around this 103.66 area. And we also have the 200 moving average around 106, right? So it might try to bounce. It might try to keep going. If anything, if the dollar is already breaking out and it tries to keep going, that would be bearish for the markets. The bearish momentum is still there. It's still dictating the price action, but it's starting to curl a bit, which means it could have established a bottom here We just need more days of data to actually determine that. So overall, the market looks like it might get a bounce followed by more downside. I'm going to be watching the 10-year Treasury yield, looking for another bounce as well on this thing. I want to see this thing get all the way back to the 200 moving average around 35. I think it might happen, which could be bearish for the markets later on. With that said, that's what I have for this video. Thank you all so much for listening. Have a great day. Remain calm, cool, and collected, and I'll see you guys in the next one. The market to the moon because the long-term future is still incredibly bright, and peace out.